This is a quick series on why I will never pay off my mortgage, and how it might make sense for others to do the same. Check out the video description or top comment for the series playlist. Subscribe for more content like this. We focus on unconventional strategies to accelerate wealth growth. If you get a third-party line of credit that's at a good rate because it's through a bank and it's extremely secure cash value, they're putting a lien against your death benefit when you get that line of credit. So you can get really great rates, but also you're paying that interest to a bank. Now when you're investing in real estate, that interest becomes deductible for that real estate investment business. So here's a quick summary of the insurance-backed line of credit with a company called Bancor, and they're one of the big providers of these insurance-backed line of credit. I know somebody who has one of these, and I think they do prime minus. I think it's prime minus 1 for his policy, but this also it depends on how large your line of credit is with them. So this is a rate that is variable as well. But you can have funds clear quicker, and you can see things here like no application fee or closing costs. This is pretty straightforward. I collateralize my whole life with a provider like this. They'll let me access about 95% of my cash value, and when I do add more to my policy, which I'm putting in $60,000 a year, they can easily increase the line of credit, and so that I can access more of those funds as I need to as I'm doing real estate investment. And when you compare this to anything else, so what is another option? So there's a concept called securities-based lending. So this is IBLOC, insurance-backed line of credit, and you can have the concept of an SBLOC, which is a securities-backed line of credit. So this is an article from NerdWallet on this. They will give you 60 to 70% of your securities value, and that's because it's much more risky. Whole life policy is not risky. Whole life companies, mutual companies, are not over-leveraged in the way that a bank is. They operate on a different scale. They're not doing the concept of fractional reserve banking and things like that. When they take funds, they invest it in one thing. That's how insurance companies make their money. So when you do this with securities, so let's just say equivalent. Right now we're looking at my whole life policy that's got about $103,000 in cash value. If I was to do that with a securities-based line of credit, I would have access to 60 to 70% of that rather than 90 to 95 or 95% of it. So the insurance-backed line of credit gives you access to a lot more because it's a much more secure thing to collateralize. It can't lose money. It's contractually obligated to credit me with 2 to 3%. And over the history of the company, they've been, the past 30 years, they've been declaring dividend rates in excess of 5 or 6%. So that's why it's extremely secure as a form of collateral for a line of credit. Then the other thing is, this number, whatever they establish as your number in terms of how much you can collateralize it and what percentage of a line of credit you can do, you have to maintain that percentage. So if your account loses value, here's a risk that you can run into. So similar to when you're trading on margin, there's a concept of a maintenance call, which is like a margin call. So when you're using securities-based lending and your assets lose value, the company who issues that line of credit against your securities can call that loan, so you either have to come out of pocket for cash, pay off the loan, or sell some securities. So and then when you sell those securities, this can be a cascading effect because now you have a realized gain or that you might have, and that could be a tax implication. So there's a lot of factors as to why securities-based lending, I'm not saying you can't do that. It's just you can't be as aggressive with how you use securities-based lending. So as a real estate investor, this is a much better option for my real estate investments. I don't come from wealth. I spent almost 9 years as enlisted Army infantry. I have no college degree. I've been investing pretty much my entire adult life, and there are things I wish I knew about years ago. Too many finance channels and forums focus on the same tired things, and I'm not saying you shouldn't do them, but I am here to show you some more tools to succeed. Drop a like if you found this video helpful, comment if you think I'm crazy, subscribe if you want to grow with me.